Hey everyone, welcome back to Corporate Decoder. Today, Novus Financial Inc. just filed an 8K reporting, a material definitive agreement, and I'm seeing some really interesting moves happening behind the scenes. Quick note, this is not financial advice, just my take on public filings for educational purposes. Essentially, the company is making a deal to defer some loan payments in exchange for new collateral and the promise of proceeds from an asset sale. Alright, so let's dive into this filing from Novus Financial Incorporated. What we have here is what is called an 8K report, which is filed when significant events happen that shareholders should know about. In this case, the big news is about a material definitive agreement, which is basically a fancy way of saying they've signed an important contract. This agreement was signed on the 18th of August of 2026, and it is called an Omnibus Amendment to Financing Documents. Think of it like a big update to their existing loan agreements. The company Novus Financial, which we know from its ticker symbol NRDE, is involved here as a lender. And they're dealing with a group of borrowers. These borrowers include several entities like Fox Point Florida LLC and Vine Borrower, and importantly, a guarantor named James Newman. So what is in this amendment? The main point is that the borrowers are getting a break on their interest payments. Instead of paying monthly interest from the 1st of June through the 1st of September of 2026, those payments are being pushed back. They will now be due on the closing date of something called the Orlando sale. This sale involves certain billboard and related assets located in Central Florida. It is a pretty significant event as it seems to be tied to the company's ability to generate cash. To make sure this Orlando sale actually happens, there is a deadline. The guarantor James Newman had to sign a letter of intent, which is like a preliminary agreement, by the 19th of August. The company has already given him a little extra time, extending that deadline to the 25th of August. This shows there is a bit of flexibility, but also a clear push to get this deal finalized. Now, where does the money from this Orlando sale go? The filing clearly states that the net proceeds from this sale will be used first to pay off all the money owed to the lenders. This is good news for the lenders, including Novus Financial, as it prioritizes repayment from this asset sale. And what if the Orlando sale doesn't bring in enough money to cover everything? To cover any potential shortfall, the guarantor is pledging another asset as additional collateral. This is a billboard advertising asset located in Bridgeton, Missouri. This means if the Orlando sale proceeds aren't enough, this Missouri billboard becomes security for the remaining debt. This adds another layer of protection for the lenders. There is also a mention of a billboard asset in Bakersfield, California. This asset owned by the guarantor will be pledged as collateral too, but under specific conditions it is specifically to secure the obligations under the Fox Point Florida loan documents if certain events of default happen. This means it is a backup to the backup, coming into play if things go really wrong with those specific Florida loans. Now, this description we've gone over is just a summary. The full details of this omnibus amendment will be included in the company's next quarterly report, the 10Q, which is expected to be filed for the quarter ending the 30th of September of 2026. So more information will be available then. Looking at the broader context, Novus Financial, or NRDE, has a very small market cap of around $28 million and a current price of $1.73. They recently rebranded from New Ride, and their focus seems to be in financial services, potentially with some shell company aspects, given their very small employee count of just one. Recent news highlights include widening losses in the first half of the year and a director buying some shares. This agreement suggests they are actively working to manage their financial obligations, likely in light of those widening losses. The reliance on an asset sale, specifically of billboard assets, and the additional collateral being pledged from those same types of assets, paints a picture of a company that might be asset heavy but cash. Flow constrained, the deferral of interest payments is a temporary relief, but it hinges entirely on the successful completion of the Orlando sale. A comparable event to watch is how companies facing similar debt restructuring and asset sales fare. Often, a successful asset sale can be a turning point. But if it falls through, the additional collateral might only delay the inevitable. Historically, companies that need to pledge significant additional collateral, especially on assets like billboards, might be signaling underlying financial stress. The risk here is clear if the Orlando sale doesn't go through or doesn't generate enough proceeds. Novus Financial and its lenders could be in a more precarious position. The success of this strategy depends heavily on a third-party buyer for those billboards and the guarantor's ability to finalize that deal. My biggest concern is the reliance on a single asset sale for such a significant portion of debt repayment. What I'm actually looking for is a clear path to sustainable profitability beyond these one-off transactions. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.